Good afternoon. Good afternoon. It's Monday, the 30th of June. Welcome to another edition of Monday Market Picks. My name is Tilan Vikramasinghe. I'm the head of research for Maybank Securities here in Singapore. Now, the countdown has begun for Trump's trade moratorium to end next week. What will come next? Will there be an extension? Will there be unilateral tariffs? No one has any idea. And I think the markets are going to be volatile, trying to price in this uncertainty. I was actually reading a very interesting interview with Ryan Haas, who actually served as Obama's national security advisor and a China diplomat. And he said that not even Trump can confidently predict how the 90-day truce will end because he's not following any type of intricate market strategy. He's experimenting and adapting to change and changing circumstances until he arrives at an outcome which he can characterize as a win. So we think in this scenario, investors are going to be looking for a lot more policy certainty, which the US is not offering. And I think that's going to be the focus of our show today. And I think Singapore very specifically offers a lot more policy certainty. So we're going to be speaking to economist Brian Lee on Singapore's latest inflation data and what he thinks the Sing dollar will do. Then I've just upgraded the STI target to 4,185, and I will take you through my thinking as well as 10 stocks which we think will benefit and will take the index higher. Jarek has turned mega bullish on CSE. We'll talk about why. And then we go across the causeway and look at IGBREIT, which has been upgraded to a buy, and we got Shifa joining us to talk us through that. Plus, we got some fresh trading ideas from our chart guy as well. So without further ado, let's jump into Singapore macro. Brian, welcome to the show. Now, Brian, Singapore's core inflation moderated to 0.6% in May from around 0.7% in April. So what's driving this?
Yeah, hi, Kiran. Thanks for having me on the show. Indeed, there was slight moderation in core inflation, and that was mainly due to non-cooked food inflation, right? So non-cooked food inflation actually cooled to 0.9% as compared to 2.2% in April, and that's on the back of, I think, falling seafood costs and also slower increases in fruits and vegetables as well. Yeah.
Okay, so what are you thinking about inflation for the rest of the year? Are we going to see a lot more cooling?
Okay. So yeah, for our full year outlook for core inflation remains at 0.5% in 2025. So that's at the lower end of MAS's 0.5% to 1.5% forecast. So let's break it down, right? So basically on the imported front, we are seeing imported inflation remaining muted. In fact, I think it has been a drag on the overall CPI. So basically, you look at energy prices at below $70 right now. The average price in June and July last year was over $80. So you can see the energy is still acting as a disinflationary drag. Right. And food commodity prices we expect to remain contained as well because of abundant supply conditions. And I think generally speaking, we expect global demand being muted to actually put a cap or put a lid on imported inflation. On top of that, the NIR continues to be appreciating, right? The MAS's band is currently at 0.5% per annum slope by our estimates, and that in itself also should put a further dampener on imported inflation. Domestically, we are looking at the government's subsidies for essential services such as preschool education and also healthcare, and that should actually continue to dampen the cost of these services. And on top of that, I think generally speaking, consumer demand has been pretty cautious. For instance, we're looking at consumers, down trading from restaurants into food courts and hawker centers and all that. And so, in the midst of this cautious consumer demand environment, retailers' pricing power is limited as well. So, overall, we are seeing pretty benign inflation conditions for Singapore this year. Yeah.
Got it. That's interesting. So, how do you think that will impact MAS's decisioning in terms of the Sing dollar when they meet in July?
Well, okay, so MES already lowered the slope 2 consecutive times in January and in April, right? So we think that has taken into account the headwinds that we're seeing this year, and of course, most of all on the trade front, right? So given that MES has already reacted and taken into account these, slowing growth kind of headwinds, we are expecting them to stay on hold, right? In July, right? Because so far, if we look at it, the since the April meeting, the external demand outlook hasn't actually worsened that much. In fact, we can even argue that it has improved because of the de-escalation in US and China tensions. So yeah, we think that it's appropriate for MES to stay on hold. Inflation also, even though it's low, but then at the same time, it's still within MES's target so-called forecast range this year. So all in, we look at that. We are looking for a stand pat in July, right? So in the absence, in the event that there are any further growth shocks, then they do have the space to further ease monetary policy in the future. Yeah.
Got it. Thanks, Brian. So MAS staying on hold will mean that the overall Sing dollar will appreciate gradually. Would that be a right characterization?
That's correct. That's correct. So basically, the slope was at 1.5% per annum by our estimates, and there were 250 basis points easing moves in January and April. So right now, on the Sing year is at 0.5% per annum by our estimates. So that's still a modest appreciating Singapore dollar. Yeah.
Got it. Thanks, Brian.
Yeah.
Yeah, so modest appreciating Sing dollar are always good to drive more investor flows into Singapore. And that's a good backdrop for us to highlight our main story today. We're upgrading the STI index to 4185 by the end of 2025. I mean, the index is only 30 points, about 30 points away from breaking above 4,000 right now as it is. We think the momentum Singapore has seen so far this year can continue through a combination of 5 structural themes as well as policy reform. Most importantly, we think Singapore will benefit from some of the rotations out of the US. Policy certainty or uncertainty is off the charts in the US, and Singapore offers the opposite with very strong policy certainty. And also we saw with the clear general election mandate back in May that further solidifies the government's ability to provide more solid policy assurance. And we've seen, all of that should allow the government to stimulate and provide some downside leeway if you actually do have downside risks coming through. And we have seen that being successfully executed back in COVID as well as during the GFC as well, where unemployment was fairly stable and we did see very strong post-crisis recoveries as well. And now we also said there's 5 themes, so let me just go into those very shortly. First is domestic resilience with low baseline tariffs, a big construction boom like what we have not seen in about 15 years, and also about $14 billion of accumulated budget surplus that will likely get deployed for fiscal support by the third quarter of this year. Second, many Singapore corporates will benefit from a Chinese recovery with sizable revenues coming from there. Our macro team has already highlighted and upgraded their China forecast for this year. Third, corporate capital returns are in full swing. We expect dividend per share to accelerate to about 8% CAGR over the next 3 years compared to 6% CAGR growth in the past 10 years. Share buybacks have also really come roaring back, and it's the highest. Now it's at the highest percentage of share when you take it as a percentage of market turnover versus what we have seen in the past 9 to 10 years. Plus, we see very positive synergies from the Johor Singapore Special Economic Zone and also scaling AI, which can bring potential cost savings and earnings upgrades as we go through this year and certainly going into next year as well. Finally, we are also very optimistic about the equity market reforms that is being undertaken by the MAS. We've discussed this at length in an earlier show, but the $5 billion EQDP can have a material positive impact on liquidity and valuation, especially for the small and mid caps. Overall, we think this puts Singapore in a pretty solid footing when it comes to driving more market upside. So far, though, if you look at the sort of melt up that Singapore has seen, it's been driven by just two sectors, telcos and utilities. But now we're actually starting to see a much more broadening, especially of institutional professional money coming into sectors like property, energy, materials. So we think we are going to see the overall momentum of the Singapore market broadening out to more sectors and more stocks as we progress through this year. From a sector view, we are positive on industrials, internet, gaming, property and REITs, the small and mid caps, telco and transport. We are still neutral on the banks, healthcare and plantations, and we are still negative on tech manufacturing. I know a lot of you have been looking at, some very strong, rebounds in stocks like AEM, but we actually don't see much fundamental support for these, rebounds to continue. So, but where do we see exciting stock ideas and stock opportunities? We have 10 names. Read the report where you can get more in-depth reasoning as to why we have selected these stocks. But we got CICT, Comfort Delgro, CSE, Food Empire, ISO Team, SGX, Semcorp, Singtel, and ST Engineering. So have a look at our newsletter today and also go through our report. You'll have a lot more details on where our bullishness for the Singapore market comes from. Now, I just want to highlight here, one of our picks there was CSE. Now, Jarek has increased CSE's target price to 70 cents from 58 cents and is keeping his buy rating. Now, the company is riding the data wave and strategically pivoting towards high growth segments like US data centers and utilities, with large scale orders expected in the second half of this year, which is perfectly timed for the global AI and electrification boom. We think the US expansion will equal mega upside. Management is doubling down on US capacity and new facilities and client wins, positioning CSE to tap into multi-year infrastructure tailwinds and policy-driven reshoring in the US. There's also Singapore government tailwinds, as we said, from the $5 billion market boosting scheme, which CSE could be a potential beneficiary as well, which can drive valuations higher. It's also a cash machine with a very defensive yield. We've got dividend yields of between 4.5% to 6.4%, consistently improving free cash flow. It's about free cash flow yields more than 20% in 2023 and to 2025. And we've got income growth as well. The stock's trading at a discount. We're looking at about a 33% growth in EPS for 2025, but trades at about 11 times PE, much below a lot of other peers. So do look at our buy call on this stock. Now, with that, let's go across the causeway and bring Shifa to the show. Shifa, welcome to the show. Now, you've upgraded IGBREIT to a buy after they announced the proposed acquisition of Mid Valley South Key Mall in Johor Bahru. What's driving your optimism?
Hi, thanks Dylan for having me. Yes, we upgraded IGBREIT to buy with a higher DDM-based target price of 255 ringgit following the proposed acquisition of Mid Valley South Key for 2.65 billion ringgit. This marks IGBREIT's first geographic expansion outside the Klang Valley. We view it positively as the acquisition deal is accretive with an attractive implied NPI yield of 7.2%. Versus acquisition of Pavilion Bukit Jalil by Pavilion REIT at below 6.5% in 2023 and in line with previous CLMT's acquisition of Queens Bay Mall in Penang at 7.3% in 2022. The acquisition also is earnings and DPU accretive. We have raised our FY26-27 earnings forecast earnings forecast by 35% and DPU by 15% respectively. So this will reinforce IGB's REIT strategy of delivering stable income and long-term growth to unit holders.
Got it. Now, stock's already done well. I mean, it's up about 25% so far in the past 12 months. So, what's going to kind of drive, what are the long-term prospects for these stocks? What's going to drive it to the next level?
We believe the strong share price performance reflects investor confidence in IGBREIT's defensive and high-quality mall portfolio. In our view, the long-term prospect remains solid. Post-acquisition, IGBREIT's portfolio will exceed 8 billion ringgit in asset value with increased diversification and scale. We believe IGBREIT has room for further growth through future asset enhancement initiatives or selective acquisitions supported by their healthy balance sheet. Gearing is remain manageable at around 0.26 times post-deal, which is still well below regulatory threshold of 0.5 times.
Got it. I mean, and given that South Valley Mall is in JB, very close proximity to Singapore, and given the sort of traffic that we are seeing across the causeway to get into JB, that'll probably be a positive catalyst as well, with more Singapore traffic going there, and probably also a catalyst in terms of the Johor Singapore SCZ as well. Now, Shifa, any downside risks we should be watching out for?
Key risks maybe would be in if delay in the completion of the acquisition, given it is a related party transaction and this is subject to non-interested unit holder and regulatory approvals. And meanwhile, for the Johor retail market, despite the Johor retail market is improving, it still faces different dynamics compared to Klang Valley, like competition and consumer patterns. However, we believe this will be mitigated by the mall's strategic location, like you mentioned, closer to Singapore border, and then they have established tenant base and integration within the South Key development as well.
Got it. Thanks, Shifa, for joining us. Have a look at her report in our newsletter today. Now let's turn to what our chart guy has for us. He's got two trading ideas. WHUR, he continues, he has a trading buy on this stock, continues to see, the stock continues to see a bullish reversal momentum after successfully breaking above his downtrend line. So should see continued positive momentum there. He also has a technical buy on Yanlord land. It's in the verge of a bullish reversal breakout from its primary downtrend. So again, quite positive there. So do have a look at those charts in our report today. In terms of upcoming events, we've got bank lending numbers for Singapore coming out later today. We've got the URA property index out tomorrow, and we've got retail sales for Singapore. That's something that we're watching out for, whether to see if there's any cooling down the domestic market out on the 4th of July as well, and the GDP numbers out on the 11th of July. Apart from that, we've got a very special market event happening on the 1st of July. Do join Sonia and Seng Yao as they talk about the Hong Kong market and whether the market's making a comeback. I mean, it's been one of the strongest markets so far. They'll be reviewing the HSI's performance, but also looking at near-term catalysts and pitfalls, and as well as some stock picks to play that market as well. Do sign up for that. With that, we are out of time. Thank you so much for joining us this week. Have a profitable trading week, and we'll see you next week.